Good afternoon, ladies and gentlemen. Welcome to the ACCSYS Technologies PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. Before we begin, we would just like to submit the following poll. If you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from ACCSYS Technologies PLC. Yelena, good afternoon.
Hello, good afternoon, and thank you very much for your kind introduction, and welcome everybody to our financial year 25 results presentation. Of course, because we are talking now with a broader investor community, we are also going to take a little bit of time to introduce our company to the people who are maybe new to ACCSYS Technologies, and ACCSYS Technology is new to them. Today, we will start with a short introduction of our company. We will give the overview of the financial year. Then Sam is going to talk a little bit deeper about the financial results we delivered. And then I will give you more business review and outlook going forward. This is me and Sam. You had an opportunity to see us in person. And starting with the introduction of our company, ACCSYS Technology has successfully developed a unique building material. We see ourselves as an industry disruptor. We are producing high-performance, premium, sustainable wood products that are having quite a unique position in the materials, in the wood materials and building material space. Accoya wood is manufactured through a proprietary process called acetylation, which has quite a robust IP protection. We have over 300 patents in 45 countries that are protecting our technology. And this process significantly enhances the wood durability, stability, and resistance to the environmental factors. Today, we are giving a guarantee to our outdoor performance of our products for 50 years above the ground and 25 years if the product is in the ground or in the water. So the Accoya starts with a fast-growing, sustainably sourced softwood, primarily radiata pine, and these trees are harvested from the FSC certified resources. So we are only using sustainable forestry practices to be our primarily suppliers. Now, the core of Accoya transformation is a process called acetylation. That is the chemical process that modifies wood on its cellular level. And this process basically introduces a soaking of the wood in a vinegar-like chemicals called acetic anhydride. So this process will change the chemical structure or cellular structure of the wood and reducing its ability to absorb water. So making it much more dimensionally stable and also rot and insect resistance. Today, we are making 3 products, Accoya, Accoya Color, and Tricoya, and those products are used to build basically windows and doors, cladding, decking, fencing, some other outdoor application. You can make outdoor furniture, etc. So the product is very sustainable, is very stable. So that means if you are going to put a paint on the window, because window is not moving, the wood is not shrinking and expanding because of the ability to absorb the water, your maintenance cycles are significantly reduced. So the full product, if you want, the cost of ownership is very, very favorable and one of the key value proposition for our products. Accoya is this very light wood. Accoya Color is colored in a color gray through the core, and Tricoya is acetylated chips that are used and put together with a specific resin to make tricoya plates that can be further used basically also to make windows, doors, and cladding or outside furniture, with the same guarantees like our Accoya and Accoya color product. Today, we have 3 manufacturing facilities. ACCSYS Technologies own 100% our manufacturing facilities in Arnhem in the Netherlands and Barry in Wales. We are using those facilities to sell Accoya and Tricoya and Accoya color within the Europe, UK, and the rest of the world, while our Kingsport facility in the US is a joint venture with a chemical company, Eastman Chemicals, and it is operational since September last year. When you look at the other 2 facilities that we have, Arnhem facility is operational since 2007. It has 4 reactors and it is capable of operating and producing 80,000 cubic meters of the yearly capacity. And this facility has been increasing the efficiencies over the last few years. Barry Wales was acquired in 2021. It is our only coloring facility that we have today. It is capable of producing, we say here 6,000 cubic meters current warm capacity. We are increasing this capacity as we are speaking today by introducing the second shift and improving the kilns. So we do expect that Barry will be able to produce at least 10,000 cubic meters in this running financial year. Kingsport US, as I said, a joint venture with Accoya USA, we invested $136 million to mechanically finish this facility, and it started to produce commercially in September 2024. It has 2 reactors with a 43,000 capacity, and it is really, we have a place in Kingsport to expand to 6 new reactors if and when it proves to be necessary. Kingsport facility is focusing to sell the product within the North America, so that means Canada, US, and Mexico. When we look what is the unique value proposition of ACCSYS, well, the company, we do believe that we have a genuinely unique, innovative product in the marketplace, with this unmatched 50-year guarantee on the performance that no other material, and let alone wood material, is offering today. So we have quite a strong product differentiation, very strong IP protection, so more than 300 patents around 45 countries. We do have a very recognized and unique brand among the wood products that is recognized as being industry leading. And not to forget, we do have established manufacturing footprint. Looking at how much capex is necessary to put actually and build the manufacturing plant, having the plant available and producing this unique product creates quite high barriers to entry to any potential of our competitors. Just to be clear, acetylation process as a process is known for a very, very, very long time, but no other company in the industry space in the world was able and capable to actually produce the high quality commercialized products like ACCSYS is doing today. So we are quite feeling confident that the value proposition that we are having is quite unique in the material space. With this, I'm going to give you the basically overview of our financial year that we are quite proud. Financial year 25 that ended on 31st of March 2025 was a pivotal year for ACCSYS and certainly an inflection point in our transformation journey. It was marked by the strategic clarity, operational delivery, and a very robust commercial momentum. This year delivered significant financial performance ahead of prior year, and you can see here on the bullet points and on the right side, our EBITDA basically showed 125% improvements. It is not only improvements in absolute values, it is significant improvement also in a percentage-wise. So the quality of earnings is improved quite a lot. Sam is going to walk you through the details of those numbers. We also delivered significant volume growth across all the region, 13% across the globe, with 16% in North America. But if you look in a specific markets like UK or like DACH or rest of the Europe, you're going to see that UK delivered even higher percentage, double percentage of what we are showing here for the global progress. We, as one of the highlights, was of course the successful startup of Accoya USA. This is the first international expansion of ACCSYS, and of course, having that local footprint in the US is helping us to mitigate multiple risks. The first risk, by finishing the project, we are actually reducing the exposure of the company of our size to the exposure of unfinished long-term capital-intensive project. Also, in a light of the trade tensions that we witnessed very recently, having a local production in the US is very, very beneficial. Wood and timber products are at the moment exempt from the tariffs in the US. We are following this progress quite with a lot of attention, as you can imagine. But we are very pleased that our timely startup actually provided us with this benefit to be present locally in the largest and the most profitable wood material market in the world. Company also delivered significant operational cost savings of 4.6 million compared to the previous year. This is on the back of our transformation program, big organizational realignment that we started at the end of last year. And then we had some benefits last year, but really we reaped this full benefit in this year. And we expect to keep at least 3 million of this benefit going forward to the next financial year as well. We have leaner, streamlined, more fit for purpose organizational structure in place, more stable leadership, much more focused, if you like, and strengthened local organizational structure. And of course, by discontinuation of our Tricoya project in Hull last year, and a finalization of our American plant, we de-risk business significantly, as I said, with the exposure to the large capital projects. And of course, Sam is going to walk you through the details on the net debts and the leverage. But by increasing of our profitability, the leverage ratio dropped from 4.4 times in financial year 24 to 2.5 times in this financial year. And this also includes CLNs that we actually got during our fundraising in FY 2024. With this, I'm going to give Sam a word to walk us through the financial results of this.
That's great. Thank you very much, Elena. And good afternoon, everyone. Pleased to be able to talk to you about our financial results. So really what we have here is just a summary of the strong financial performance for the year. I'll go into a lot more detail about some of these metrics in terms of revenue, gross margin, EBITDA, and also net debt on the coming slides, and explain more through waterfalls as to what's changed year on year in these. But just really highlighting some of the financial metrics now. So as Elena mentioned, sales volumes overall total increased by 13% year on year, which is a very strong position, and it shows that overall global market demand for Accoya products. Revenues were up 1% for the group but 8% on an aggregated basis, which includes a share of the JV's revenue. And I'll walk you through the revenue bridge shortly. Our gross profit margin was 30 basis points higher than the previous year at 30.3%. And this was higher than the target that we set ourselves of maintaining a 30% gross profit margin. Elaine already mentioned the underlying operating cost improvements of 4.6 million, which came from our business transformation program and our solid routes efficiency initiative in Arnhem to improve overall profitability. And as a result of the gross margin improvements and the operating cost reduction, our underlying EBITDA for the group, which excludes the joint venture, nearly doubled from 8.5 million to 16.8 million, which is a really pleasing performance. The margin increased by 610 basis points to 12.3%. And then when we include the results from the joint venture, of which we have 60%, so we equity account for that, the adjusted EBITDA increased from 4.8 million to 10.8 million, up 125%, with a more than doubling of the margin to 7.3%. Our net debt was 42.6 million, and with a leverage ratio of 2.5 times, as Helena mentioned, and I'll talk you through the net debt bridge in a few moments. So really moving on to our volumes performance, and here you can really see the 13% increase in total sales volumes made up by end markets. 13% was really a very strong performance, particularly when you consider that against the backdrop of a challenging building materials market, which has really been impacted by macroeconomic challenges in the last year, when there's been slower growth in the global macroeconomy, higher inflation resulting in high interest rates, and then a lot of talk in the last several months about the potential impact of tariffs. So double-digit growth for the group, but also across all of our key markets is a very strong performance. And just picking out some of those areas, UK and Ireland was up 27% year on year. North America was up 16% year on year. And that included the effect of North American sales transferring from our Arnhem facility to the joint venture following its commercial startup in September 2024. Rest of Europe showed a 16% increase, with particularly good growth in France and Northern Europe as well. And then when we think about the product mix, Accoya Colour, which is the grey coloured product that you saw earlier, really strong momentum there. This is a premium product which achieves a high premium price, and we saw a 34% increase in demand for that product during the year. And with that high premium price and higher margin, that gives a favourable mix variance for our overall gross margin and profitability. Accoya for Tricoya sales volumes were in line with the previous year at just over 17,300 cubic meters per year, which represents 27% of total sales volumes for the year. And really, Tricoya panels remain a very key product offering for us, and it reaffirms our belief in the long-term market potential for these panel products. Not only does it utilize capacity in the plants, but we're also able to use a lower grade wood to produce Accoya for Tricoya, and also it means that we can offset wastage from the two plants by using offcuts, stickers, and beams, and other types of wood from the manufacturing process. And Elena will talk about the end markets in more detail slightly later on. So when we look at revenue, group revenue, as I mentioned, increased by 1% to 136.6 million. But that really masks the transfer of sales from Arnhem to North America. So in FY24, the previous financial year, North America's sales were 25 million euros. And in FY25, prior to the commencement of operations of the joint venture, it was approximately 10 million euros. So we saw a 14.9 million shift in revenue from ACCSYS Group to the joint venture. But the pleasing thing is that lost revenue and volume associated with transferring volumes to North America was more than fully offset and recovered by Arnhem during the year. So we saw a 16.7 million improvement in volume and mix as a result of that. Whilst it looks like pricing reduced by 2.1 million euros year on year, which is a 1.7% decrease, that again is a feature because of the transfer of volume to North America. In North America, we do achieve a much higher price than the rest of Europe, about a 20 to 25% price premium. So by transferring the volume to the joint venture, we're giving away a higher priced product. So that has a knock-on effect on the sales price for the ACCSYS group. But this is just a one-year feature because of that transition. When we look at total Accoya sales across the joint venture and Arnhem, our average selling price was up 1.2% year on year, showing that maintenance of the high premium price is very key and very strong for us. The license fee and royalties that you can see there, 1.3 million, is really from the joint venture. We received license fees as part of the build and construction of the plant, and royalties represent a percentage of sales that we get from the joint venture as it sells products. And then acetic anhydride is the chemical that is used in the acetylation process. And what we effectively did through operational efficiencies, we were able to reduce our anhydride usage in production, which had a favorable impact on production costs and hence gross margin. But the byproduct from the acetylation process is acetic acid, which we then sell on. And really, because that lower anhydride usage meant we had lower acetic acid sales volumes, and with a slightly lower market price for acetic acid, that led to a 0.2 reduction in revenue for acetic acid. So then in terms of gross margin, as I mentioned before, the gross margin went up by 30 basis points to 30.3%. You can see the pricing and license fee movements there, as I just talked about on the previous slide. But really, from an overall cost perspective, 60% of our cost of sales comes from raw materials, which is really wood and the chemicals. And we saw in the year a favorable wood purchase pricing variance, particularly on wood chip grade, where our purchase price was lower than the previous year. So we had a benefit from there. And really that improved anhydride usage in production, combined with that wood purchase price favorable variance, led to an improvement in the gross margin of about 1 million euros there. Labour costs represent the annual staff pay rises that we give to our staff. And then we had a slight favourable benefit from lower maintenance costs during the year. And that was really following the CapEx investments that we've made in previous years. So really, when we think about the progression of our adjusted EBITDA, which is our key profitability measure, that increased from 4.8 million to 10.8 million, with the margin improving from 3.5% to 7.3%. I mentioned the gross margin improvement of €500,000 on the previous slide, but one of the big driver behind that profitability increase was the 4.6 million of operational cost savings that we saw during the year. And that really came from our business transformation program and also the Solid Roots operational efficiency initiative. And that 4.6 million exceeded the target that we'd set ourselves. Tricoya UK was the plant associated with Hull, and the decision was made in September of last year to discontinue that plant, with that business being placed into voluntary liquidation in December 2024. So costs associated with Hull in FY25 were 2.1 million, which were 3.2 million lower than the previous year. So you can see the 3.2 million benefit that we are seeing year on year from the closure of Hull. And then the joint venture in North America, because it was in its pre-revenue phase and also due to costs associated with the ramp-up of production since September 2024, our share of the loss of the joint venture for the year amounted to 6 million euros, which was 2.3 million euros higher than the previous year. So the combination of all of those effects, upsides and the JV downside, takes you to the 10.8 million adjusted EBITDA and doubling of the margin to 7.3%. So if I look at the segmental breakdown, starting from the left-hand side, you can see that the ACCSYS segment, which is really the Arnhem and Barry operations, is very healthily profitable, generating and contributing 22.7 million euros of EBITDA to the business, with a margin of 16.6%, and that margin was 3 percentage points higher than the previous year. Costs associated with Hull in the year were 2.1 million, and corporate costs, which represents effectively the London head office and the cost of being listed, was 3.8 million. But we reduced those corporate costs by 0.9 million in the year. Hence, underlying EBITDA for the ACCSYS group amounted to 16.8 million in the year, with a margin of 12.3%. And that improvement in the margin of 610 basis points was very, very pleasing. You can see the effect of the joint venture there. And what we always said is that in the first full year of operations, following the commencement of the JV in September, you would expect that to go through startup losses. But really, for this new financial year we're in, we expect that joint venture to be profitable. And then you can really see the adjusted EBITDA. So it's a good waterfall to show how the adjusted EBITDA is built up. But I think the key thing to really understand here is that overall ACCSYS segment profitability at 22.7 million. And then really moving on to net debt. And this slide shows the evolution of net debt. We have a continued strong focus on operational cash flow improvement and really focus on deleveraging the balance sheet, which is in line with our strategy. So net debt at the end of the year amounted to 42.6 million, which was a 5.5 million increase on year. But really the leverage ratio reduced to 2.5 times, really driven by that big improvement in underlying profitability. We saw a big increase in free cash flow improvement, which improved to 8.8 million, up from 3.7 million. We saw a working capital outflow in the year of 7 million, which was really driven by higher inventory levels of 5 million in the year. But this was planned by the company because we wanted to ensure that we had product available, had enough inventory to support product availability and the strong demand and customer service that we're seeing in the business. Going forwards, what we target is to maintain about 3.5 months of raw wood in stock for the business, and also about 1.5 months of finished goods in stock to really ensure that product availability for our customers. As the JV completed its construction phase and associated with the ramp up, we spent 14.5 million in the JV, and that was all planned. Maintenance capex amounted to 1.9 million, which was in line with phase 1 of our strategy. Interest paid and also accrued on our banking facilities amounted to 4.3 million, of which 2 million related to accrued interest on our convertible loan notes. And with tax payments, which really comes from the profitable plant in the Netherlands, that took our leverage to 42.6 million. And with our capital structure, we recently extended our main primary ABN AMRO debt facility by a further 18 months out to September 2027. So just from a summary perspective and bringing a close to the finance section, we saw a really strong financial performance in FY25. Total sales volumes growth of 13% was particularly pleasing against the challenging building materials backdrop impacted by macroeconomic challenges. The 125% improvement in adjusted EBITDA to 10.8 million was a very strong performance, and really that growth in free cash flow generation was really pleasing, and it really highlights our continued focus on deleveraging the balance sheet. And with that, I'm going to pass back to you, Lena, who's going to talk you through the business review.
Thank you, Sam. We unveiled in early 2025, at the end of January, at our Investor Strategy Day, our new strategy. And in this financial year, we have a new company strategy in place with a clearly defined roadmap and targets. We call it a focus strategy. It is transforming ACCSYS to a fundamentally strong, more operationally efficient, more customer-centric, united, safe, and sustainable business. And when we talk about fundamentally strong, we refer to continuous progress on the financial and operational targets. And as a first step in building that credibility, we were very pleased to present the financial year 25 results progress. Operationally efficient is all about getting our plants and functions to operate what I like to call a Swiss clock. Customer-centric is the story of growth. As a premium product, we will focus to deliver premium service and also premium experience to our customers. A united team of highly skilled professionals and performance-driven teams is going to be there and is there to execute on this plan. And finally, safe and sustainable, as we want really to lead a progress in sustainability sector. Now, our strategy is going to be executed along 3 phases. The first phase that we are called is basically resetting and transformation of the company that started last year, and it will last until the end of financial year 27. It is focusing on resetting operationally, maximizing return from the existing assets, and also maximizing cash flow from the operation. So we already put quite a lot of capital and metal in the ground in the last couple of years of ACCSYS history. So in this phase, we are really focusing on getting returns on that capital. Second phase is about getting all the plants to their maximum capacity, extracting further efficiencies with the really minimum investments. We also expect to look at Accoya color and to be produced in the US, seeing that this product is growing with 34% this year, and we expect that trajectory is going to accelerate. We do believe that in a phase 2, or maybe even at the end of phase 1, we are going to look on introducing a Accoya color facility in the US so that we free up the space in Wales for the growth in the rest of the world. And we will here also be laser focused to leverage further. Now, after the phase 1 and 2, company is going to be in the position of strength, in a better position of financial strength to fund the future growth that we expect to be much more modular than in the past. In the past, we basically were focusing to build a new plants every couple of years. Now building a new plants every few years, you need, as I said, in the US, we spent 136 million to build a 2 reactor and all the facilities around it. Now moving for more modular growth, in the US, we can add 6 additional reactors. We can add them one at a time or in pairs, and it is going to request significantly lower investment. And we already paved the foundation for the next reactor, so it can be just plugged in and with some pipeline connected to the rest of the plant. So that means that moving from this big, large capex project to more modular growth is going to be quite fundamental and more also digestible for the company of our side. For each stage, as you see, we put a very strong targets, and in next slide, we are just kind of following on how did we extract on the targets on the strategy that we put in place in January. With this year financial performance, we are quite happy that we are very, very well on track. And for the volume target on 100,000 cubic meters, what we saw in a financial year 25 and what we are seeing now in a Q1 and also the book for the Q2, we are quite confident that we can deliver on it. Looking at adjusted EBITDA margin, Sam just mentioned, and you saw in the bridge, our core assets, so core of ACCSYS is already performing at this level. So at the moment when we bring Accoya USA to the profitability, we do believe that it is very, very much possible to achieve both adjusted EBITDA, but also operating cash flow conversion. Our core assets are free cash flow generative, and already now for the second year. So we are going to continue to have this very, very strict cost and operating working capital discipline in order to extract as much value as possible from the units that we have under our management. Now, looking a little bit more on what's happening in Arnhem. As we said, in Arnhem, we have 80,000 cubic meters of capacity. This unit is producing very well on a very high quality. We have reliability, availability of the plant was very good in a financial year behind us. Underlying EBITDA, as we said, is already increased from 5.1 million to 18.9 million in a financial year. So that was really with the transfer of the sales that were exported from Arnhem to the US now to be produced in the US. We are very, very happy with the delivery that teams made happen during this year. We have a good operational efficiency program that we started last year called Solid Roots, that is really focusing on getting the maximum efficiency from the plant. It showed also good progress. And as an innovation leader, we continue investing, and this year we also invested 1.2 million in R&D, predominantly looking at different species of wood that can be used for the acetylation, and also fire retardancy and different colors of Accoya to be produced in the future. Berry had a fantastic year, 34% year-on-year sales volume growth. We invested in a planer, so we are now capable of producing more finished products, so we can produce a finished decking in Berry. And we introduced it in France this year to test the market with a very, very good success. And by adding a second shift, we basically doubled capacity from what we had last year. So we do expect that the Accoya Color is going to be one of our best performing products in a year ahead. We also invested quite a lot in marketing and sales. Sam was talking to you about the different regional performance. Everywhere more than double-digit growth. We also launched a new branding with a new color portfolio, and the new finished decking product is coming in this financial year. US expansion was one of our major successes, I would say, in the US. As I said, first international expansion for Accoya. It was a dream for many years, and finally, with of course our partners, Eastman Chemicals, and very capable team in the US. The factory is producing well. The quality of the product is exactly the same like it is from Arnhem. We are giving the same warranties like Accoya is doing in Europe and the rest of the world. And as I said, we are at this moment exempt from tariffs. So the timing of this production facility was actually really perfect. So the most of our success actually in the coming 2 years depends on it is really all about sales and the commercial success in the US. We do have enough capacity in both plants to funnel and to feed the growth in the next 2 years. In America, we are focusing on areas of Florida, California, Texas, and New York and East Coast, where most of the premium product has a big market. American market is estimated to 8.4 million cubic meters of wood products, of which we today have less than 1%. And this is, US is by far the most profitable and the fast growing wood market in the world. So we are very happy to be present and to offer the better customer service and availability in the region. And we are seeing in our sales by picking up and making another step change in the beginning of this, in the first financial quarter of this financial year. Now here we are very much and very proud to showcase a couple of very nice projects we delivered this year. For those of you who are living, for instance, in London, if you go to King's Cross train station and see the Google office, that was our big project last year. Accoya looks amazingly on the facade of this. This year we had the New York in the New York Central Parks. We have a bow bridge that is made of Accoya, and we also have plenty of benches in Central Park this year, and paths are done by Accoya, so very nice. We have a new Molly Hotel in Aspen, Colorado. We have the hotel in Switzerland that also use the decking of Accoya, ABB building in Switzerland, the Wilburn retail park in the UK, and also plenty of private homes that wanted to have the quality on the outside, and they were using our products like this very beautiful charred decking and cladding of the house in New Zealand. Now we also had another very nice project for our listeners from Amsterdam. Nemo roof terrace was now decked by Accoya. So next time when you go and take your kids to Nemo Museum, please pay attention, and you can also witness how very well our product can sustain weather and all kind of environmental conditions. So not only looking at the planet and a profit, we also look at our people. This year, company had a fantastic increase in our S&P corporate sustainability score. We did the assessment and reached 11 points increase. So that is putting us in a 20% of the companies in our sector. Now, looking at the size of ACCSYS, this is of course significant achievement. And of course, sustainability is in the heart of every and single employee in our organization. We are 100% sourcing from responsible sources, so certified sources for the wood, and with the very responsible forestry practices, and we will not move away from that under any circumstances. We also did this year, not only that we are looking at the planet and the profit, we are listening to our employees. This year we did employment engagement survey, and 73% of our employees are satisfied and very proud of working for ACCSYS. We also started with a well-being initiative in Arnhem, investment in the learning and development, and we also take with our colleagues, we took part in the Mega Vandal Marathon in Arnhem that was organized for the kids and people with handicap, and it was really quite an amazing, fun time we had, and very proud to be part, and cannot wait to be part of it next year as well. With this, we are coming to our outlook. So we are quite encouraged by the positive start of the year. And while we have to be a little bit cautious with the continuing macroeconomic challenges, we are quite confident that we will continue to deliver sales growth and execute on our strategic priorities like we lined them out in the beginning of the year. We do have and we rely on resilient premium pricing and operational leverage that we have across the globe. In this financial year result, we have demonstrated the benefits of our ACCSYS strategic plan and disciplined execution. So we will continue to be disciplined. We will continue to be on this path to really prove again and again the credibility of me and Sam and our management team. But having successfully expanded our geographic footprint, we will focus now primarily on accelerating our sales and capacity utilization that is going to bring us further profitability improvements and drive to a much better returns. With this, I would like to come to the last page that is basically reiterated why ACCSYS is a substantial growth opportunity from the shareholder perspective. So This year financially is pivotal year for ACCSYS, an inflection point on our transformation journey. It was marked by the strategic clarity, as I said, operational delivery, and robust commercial momentum. We are not just selling wood for making these beautiful windows and doors, decking and cladding. We are enabling the shift in the industry. So we see ourselves as a really industry disruptor, and we are recognized also by our competitors as an industry disruptor. Our markets are large and our demand is growing. Our technology is proven and it is very well protected with this very strong IP that company is having. Our plants are operational. We have them in the major markets in the world, and they are scaling, and our efficiencies are very much improving. So while we are continuing and noting these macro and geopolitical challenges, we remain very, very positive about the future. And last but not least, we do have capable teams in place in both US and Europe to further drive us and the company forwards and upwards. With this, I would like to thank you for your attention, and we will open the floor for the questions.
Perfect. Jelena, Sam, if I may just jump back in there, and thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that have been submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can all be accessed via your investor dashboard. Guys, as you can see there, we have received a number of questions throughout your presentation this afternoon, and thank you to all of those on the call for taking the time to submit their questions. But Jelena, Sam, at this point, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so. And if I pick up from you at the end, that'd be great. Thank you.
Thank you very much. So the first question that I can read is, could you provide more detail on your route to market in North America? So our route in market in North America is we are selling most of our products through the distribution channel. So 90% of our sales would go through the distribution. We are having our partners in the region that are very covering all of these areas of interest that I show in our presentation. Now, of course, those primary distributors are then connected to the secondary distribution in the countries, and then they are even providing even more spread of our product through the country. Now we have grown our own commercial team from three people from 2 years ago to 13 today, and they are predominantly focusing on helping new distributors to generate a business, to educate about Accoya, and also to spend a time on a specification selling with architects and architects firms. So we do have basically our own sales force. We do use the sales force of our distributors, and we are choosing our partners very, very carefully so that they have a very good coverage, that they can hold a substantial inventory so that service levels are good to the OEMs. And we are also helping them to grow that business by providing technical support and by providing specification presentations when necessary and in collaboration with our partners.
Great. So the next question, how do you expect the sales split between the group and the JV to evolve over the next 2 to 3 years? So when we, earlier this year in January, we did an investor strategy day, and the slides and the video recording are available on the ACCSYS website for you to have a look at. And this was one of the areas that we showed. So Jelena mentioned the phase 1, phase 2, phase 3 of our strategy. So at the end of phase 1, we said we would have a run rate of 100,000 cubic meters, and that will be broadly made up of 70 to 75,000 cubic meters coming from Arnhem and 20 to 25,000 coming from the JV. And then as we move to the end of phase 2, so end of FY30, we said we would have a run rate of 120,000 cubic meters, with 80 to 85,000 cubic meters coming from Arnhem and 35 to 40,000 coming from the joint venture.
So the next question is the process patented? Is there much competition or others coming into the market as competition? Well, I think we mentioned a couple of times in a presentation, the process is patented, not only the process, the product is also patented as well. So we do have over 300 patents in covering more than 45 countries. There are other wood modified technologies available in the marketplace, but none of them is actually covering the performance and the quality of Accoya. So we are really recognized as a market leader in that premium segment.
Okay. The question here is about how certain is lowering debt. Well, you could see from our performance in FY25, our leverage reduced from 4.4 times to 2.5 times as we really grew that underlying profitability. And then really that debt reduction, again, I laid it out in our investor strategy day in January. At the end of FY30, at the end of our phase 2 of our strategy, we will have zero net debt. So that is predicated on executing our strategy and delivering that sales volume growth that we've talked about, improving the profitability, delivering operational efficiency, maintaining that high average sales price, and maintaining that gross margin. But for us, FY25 results has been the first touch point in terms of showing the strategy execution. And really, as we continue to deliver on that strategy, the company's balance sheet will strengthen and we deleverage very, very quickly.
There was a question, will the spare capacity at Arnhem allow the company retain the full market opportunity which you were expecting to gain from the abundant Hull plant? Is the profit margin for Tricoya similar for that to Accoya? And will Kingsport be producing Tricoya? I guess was the question. We do Tricoya today, and as you saw from the presentation, is representing depending on the year, between 25 and 30% of our product mix. We do have long-standing partners that are actually using acetylated wood from us and produce Tricoya panels. And we will continue to keep this product in our portfolio because it is quite important. It offers us opportunity to build this market and continue introduction in the marketplace. It gives us a flexibility to use lower quality Accoya planks, to use all kind of offcut and wood that we normally would have to throw away. So we are working with the zero waste for wood in our plant. And so Tricoya is going to continue to be a product for us. The margins of Tricoya are lower. The margins are similar, but the selling price is lower. So at the absolute terms, we earn more on Accoya than what we earn on Tricoya if we sell per cubic meter. Kingsport is not going to be producing Tricoya in the first place, but we are working with the partners in US, finding the MDF producer, local MDF producer that would like to trial and start producing the Tricoya plates. So the Tricoya boards are today being exported by Medite and by Finsa to all the other parts of the world from Europe. Of course, it would be beneficial if we could find a local business model for this. But for us, in Kingsport, Accoya is in focus, Accoya and Accoya color in the first place. Let me see. Let me see what is spare capacity. Why is the Accoya product worth the huge price premium over the other types of timber? Is there market resistance to the high price? our product is a premium product, and seeing at our growth percentages in this year, but also over the last year since the ACCSYS is existing, there is a specific marketplace for our product. We are giving by far we are the company that is giving by longest warranty on the environmental exposures outside and in the ground and in the water. We have proved for so many years that we are existing that we do have a premium quality in place, and that premium quality is having its average selling price. But we do not like to talk about price that much. We like to talk about total cost of ownership. And as a total cost of ownership, and as we presented in our Investor Day presentations, if you're interested, you can go to our website and look at it. If you take windows and doors, and if you look at the windows and doors made from the traditional hardwood, that is, you cut the tree that took 200 years to grow, you make the window. The price of the hardwood can be sometimes, depending on the period of the year, can be 2 times less than Accoya. But when you look at the total cost of ownership when that window is made, Accoya premium comes only to 10% to that one of the hardwood. So in that sense, we build our market on a very, very proper and strong value proposition, and we will continue to do that going forward.
And then there are a couple of questions then which were similar in relation to the Tricoya plants. So as I mentioned before, the decision was taken in September 2024 to discontinue the whole plant, and then in December of last year, that plant was placed into voluntary liquidation. So it is now no longer part of the group. It is up to the liquidator to dispose of that or effectively dismantle that plant and take it down. We incurred exceptional costs in FY25 of 11 million in relation to that whole plant, but the whole plant is no longer part of the group. It's up to the liquidator to manage that business now.
Guys, if I may just jump back in there, and thank you very much indeed for being so generous of your time and addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended. But Yelena, perhaps before really now just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments just to wrap up with, that would be great.
So thank you very much. So again, we are seeing our company at the inflection point. And as I said, our markets are huge and our demand is growing. Our technology is proven and it is protected. Our plants are scaling, our efficiencies are improving. We are very, very much ready to continue on this very, very nice transformation path for ACCSYS. Thank you very much for your attention today.
Thank you.
Yelena, that's great. And thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ACCSYS Technologies PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.